what have been the impacts of fintech and the emerging technologies that have been introduced into the market over the last 20 years, right? We'll be looking at the impacts in terms of financial impact. I'll be looking at it in terms of social impact, economic impact, and then talk about how well have we done from an environmental and also from a developmental perspective. Then I'm going to challenge us, right, to look at what are the current trends that are happening and how well are we living to the tenets of building sustainability into the businesses that we do, into the approaches that we take to business, and into how we engage with our environment and our communities, and indeed, in terms of building the sustainability that will create value over the next 20 years, right? And I'm going to end up with a charge to each and every one of us. Okay, awesome. 20 years ago, right, there were less than 10 companies in the fintech space, right? And amongst all of them, I think they had received investment somewhere in the region of $5 million in Naira terms at that time. 20 years later, we have over 250 fintechs, right? And in just the last year alone, about 96 of them received investments of just over $400 million, right? Now, if you take all the 250 fintechs together, I think the value that has been created in terms of investment or value that these companies contributed to the Nigerian economy, the total value of all of the companies, I'm estimating at almost $8 billion, right, in terms of value that has been created by organizations that have created businesses over the last 20 years. 20 years ago, the number of jobs that has been created, or should I say livelihoods impacted, I would say is less than 200, right? 200 staff and entities who were working for tech or fintech related companies at the time. If you look at what's happened today, right, as at today, I think the fintech companies kind of employ in excess of 20,000 people, but that's nowhere near the number of lives or livelihoods that have been impacted. We are estimating that more than 2 million livelihoods have been impacted. And amongst those numbers will be all of the agents who now have an opportunity to create value and wealth that they can use to support their families, includes those who have been able to, enabled to take their e-commerce or internet businesses on Instagram and create value for their families as well, right? Again, 20 years ago, the businesses were serving only about 150,000 customers, but today, amongst all the fintechs, I think over 65 million customers are being served on an annual basis, right? How many businesses were impacted or served? These are companies who have received value from the fintechs themselves. Today, over 530,000 companies, small, medium businesses, including large organizations, have been receiving value from these organizations. E-government didn't exist 20 years ago, but I'm aware of at least 270 e-government initiatives, digitization of government collections, government payments, across all the state governments, federal government parastatals, state government parastatals. And then just some thinking about the statistics in terms of volumes. But probably most important for me is where Nigeria is on the global map, right? 20 years ago, Nigeria was not seen as a tech nation. We're not recognized as anywhere in front of digital technology. We're seen specifically as a backward organization. 20 years later, we're now recognized globally as one of the top tech nations across the world, and not just in Africa. So that's what we've done. The question is, what are we going to do into the future, right? As a fintech business, and I know a number of you here are, most of our priorities are around what's our revenue, what's our valuation, how are we growing it, right? Should those be the only thoughts? Should we begin to think more about what kind of sustainable impact will we leave over the next 20 years, right? And I know there are a number of challenges, and the next panel is going to talk about some of those, right? When you look at, first of all, competition, right? The competitive environment has changed significantly, right? You have fintechs, you have neobanks, you have financial institutions, You have everyone who is playing, including big tech, coming into the environment. The nature of the competition is becoming so intense, but should we be doing competition in a manner that we forget the ability to create sustainable businesses that will survive into the next 20 years? We've looked at business models as well. I mean, for the last few years, we've seen an acceleration of growth fueled by investments that have come into the market. As those investments begin to slow down because of the global economic environment, behaviors are changing in terms of business models, right? People are driving more towards creating sustainable businesses. Profitability is becoming a key concern. How are you doing that and still thinking about the next 20 years and building a business that will be sustainable into the future? What about talent? Probably number one of any business or CEO today, right? You're losing talent to competition, you're losing talent to migration. How are you refilling that talent pool, right? Most organizations are just trying to pay bigger salaries to attract the most competent talent. Should we be thinking about how do we refill the talent pool and rebuild the talent population so that we will have, again, sustainability as we go into the future in our businesses? What about the technologies that have been said will disrupt the future, right? I've picked two of them: big data and artificial intelligence, blockchain and crypto, right? Fantastic technologies, likely to transform almost every industry in which they will touch. But are we thinking about how those are going to be deployed locally or internationally? Are we going to be consumers of those technologies, or are we going to be producers, creating value for the continent and for the future generations of Nigerians and Africans? What are we doing to build the capabilities and the talents in Nigeria or in Africa that will build the solutions that will solve the problems that exist for us? Because again, like we've learned over the last 20 years, those solutions are not going to come from foreign organizations, they're going to come from us. And we will not get those solutions if we do not build the talent pool ourselves. What about the next 20 years? What are we going to do in terms of e-government? What kind of sustainable impacts are we going to create? What kind of sustainable impacts are we going to create for the environment, right? These are some of the questions that I think, as we go into the sessions today, and I know there are two panels that are going to discuss sustainability, are really important questions and comments to ask. So my charge, which is my last slide really, is as we think about the next 20 years, right? Yes, we must think about financial impact. How do we create value for our investors? We must think about valuation, right? But we must also think about our social impact. We must also think about our economic impact. We must also think about developmental impact, right? And we must also think about the sustainability of our businesses as we go into the next 20 years. Thank you very much.
So if you look to the back, you see that it's right on time. So please, ladies and gentlemen, a standing ovation for Akeem Lawal, MD, InterSwitch Pure Pay. A round of applause for him. Thank you very much. So, I mean, from where I was sitting, I saw that what he did in his presentation in such a short time was to take us down memory lane to 20 years ago when there were just a few companies in the fintech space to where we are today, and then looking to the future. So thank you so much for such an efficient use of time, to take us to the past, the present, and then as we navigate towards the future. As you rightly mentioned, ladies and gentlemen, we're moving into a panel discussion now that would focus on the challenges in Nigeria fintech ecosystem. So this panel is going to be focused on challenges in the Nigeria fintech ecosystem, and it's going to be one that is open for discussions, comments from the audience, whether you're joining in physically or you're joining in virtually. So please, if you have comments, if you have questions, please note them down now. Now is a good time to note them down. And also as the conference proceeds, as the panel discussion goes on, would like this panel to be very interactive. Now, we're going to be looking at challenges in the fintech ecosystem with a view to creating solutions. So we are co-creating solutions, and we want you to be a part of it. So please, I enjoin you to sit back, relax, and be involved in this panel discussion. Same goes for our virtual audience. who are joining in virtually using the comment box on the Zoom application. Please drop in your questions, your comments as the session progresses. Now to the panelists and the moderator. Now, this panel, as I mentioned, is focused on Fintech Industry Forum. It's a Fintech Industry Forum that's going to be looking at a dissection of challenges in the ecosystem. And the first panelist I'd like to invite is Deremi Atonda, MD Remita. A round of applause for Deremi Atonda. Thank you. We've got Kofo Arowolo, MD Woven Finance. A round of applause. We've got Oluwatomu, CEO Opay. Please, a round of applause. Thank you. You're welcome. We've also got Ajibade Laolu Adewale, Group Head Partnerships, Digital Solutions, and Fintech at Wema Bank. A round of applause. Joining us virtually, we have Aitwa Scholar Oladejo, Executive Director at FSI. A round of applause. Now, to moderate this panel, I'd like to hand over the microphone to Inchedo Lisa. She's the Associate Manager of Fintech at Steer Business. I'm talking about Inchedo Lisa Anama. A round of applause for her as I hand over this baton to her to moderate this conversation.
This is working? Sorry, is this working? Can you hear me well from the back? All right, thank you. My name is Inchedo Lisa, like I was introduced as.
You want this?
And I work at Stairs Business. I work at Stairs. Some of you may or may not know too much about Stairs, but Stairs is a data intelligence startup, and we're all about just solving the information problem in Africa, like the first speaker was talking about. So before I go ahead, I think there's something that struck me walking into the room, and I do want to just mention it and say a big shout out to the Fintech NGR crew. And I think once I saw that there was someone doing signing, the first thing that hit me was that, wow, you guys not only talk inclusion, but you're actually walking the walk. So congratulations, and that was really remarkable. All right, so we have an interesting job today in that our focus today is the way we're going to know that we've done a good job and we've had a good conversation is being able to dissect the challenges within our very dynamic ecosystem. So my job as a fintech, as overseeing the fintech practice, is really to be a cheerleader for this industry. But I think one thing that I want to know that we did very well today is leave people not just with solutions, but better ways to think about the actual problems. I'm not hoping for the solutions to come out of this room or this conversation, but I'm hoping that if we change the way you think about the problems, maybe perhaps we can get closer to finding some solutions. So there are going to be three major problem areas that we're going to talk through. We're going to talk about the challenges with scaling as a fintech, getting closer to moving away from just pure revenue to profitability. We're going to talk about the battle for talent. And then lastly, we're going to talk about things around corporate governance, given all that we're seeing on social media and all of that. But to start off, we're talking about scaling. I'd love for us to take a look at basically, when we think about scaling, I like to think about scaling on two sides, scaling your customers and then scaling your supply. So to start us off today, I wanted to throw a question open. To Mr. Jibade, I'd love to ask a question around when we think about growing your customer base. The other day, something dropped in my mailbox. It was like a report from McKinsey. And you get all these reports and you tell yourself you read it, you never get around to. But among the first few lines, one of the things I picked up on was there was a stat that said that in Africa, African consumers, if you compare them to maybe consumers in Latin America, it's about 4 times harder to monetize an African consumer. And then if you do the comparison with the consumer in the European Union, it's about 13 times harder to monetize an African consumer. The natural answers to this question is, oh, Africans have smaller pockets, right? And so the first question I wanted to ask is it just about small pockets, Mr. Jebade? Is it just about small pockets? What are the other factors that may likely be causing it to be so hard to monetize an African consumer?
Hello. Thank you, Lisa. Well, I don't know where you got that statistics from, and
McKinsey.
it can appear to be correct. Because most times when we are trying to digitize a journey or find solution to problems, we don't look for find solutions. We don't look for the problems. But for where, and that's seems to speak to some of the challenges of fintech. Everybody is going into a very saturated market. When the other speaker, when Damilola from Software was talking, he spoke about the other opportunities and he showed a graph of what has been done. Payments and digital payments and new banks have actually scaled. And it seems that that's where everybody is focusing on. But there are some emerging technologies that we can look at and see how we can solve the problems there. There's a small company called, maybe I should hide their names. Their focus is on transportation and trying to solve the problems of transportation from when you board a vehicle to when you get to your destination to when you pay the driver and when you get the fulfillment for the journey. So I think one of the problems that we have has been the problem of identifying what problems to be solved, and if you can solve that problem, we will see traction. So I agree with you, but it's in the sense that we probably will not solving the problems that should be solved. There are problems around insurance or capital market. When the other gentleman who represented the DG of security was talking, he mentioned the figures in terms of payment that has happened throughout the year, but just a percentage of it came into the capital market. Somebody should look at that and go and solve that problem, and then we see the traction we are looking for. Yeah, that will be all.
Thank you. Yeah, those are interesting comments because like you pointed out, the map was very rightly showed there were so many verticals that were yet unexplored. And I think one of the quotes that he put up, which was interesting, has something to do with smoke and fire. And it's true that there's no smoke without fire. And so the question is, and I'm gonna just throw it up open for whoever wants to take the first stab at this is we have acknowledged that mostly a lot of the innovation within payments is really largely concentrated. A lot of the innovation within fintech, I should say rather, is really very concentrated within very few verticals, payments being the top one of them. And we'd like to know that. I'm sure it's not just a lack of acknowledgement that there are other verticals to explore. So what is it actually? What are some of the factors that may be limiting people wanting to innovate in other fintech verticals and just having so many people doing so much in payments alone? I don't know if there's anyone in particular that wants to go at this one.
I can take this. Hello. I think we need to talk about context first, right? When we look at Nigeria, we have a population of about 440 million. Africa is about 1.3 trillion. So Nigeria is about 20% of Africa. So it is a viable market. When we look at the revenue that can be derived, which is through the consumers, you alluded to the fact that in Nigeria, the personal expenditure consumption, or across Africa, is about 1,500. In Latin America, it's about 5,000. And in Northern America, it's about 49,000. So what we see there is disposable income and the revenue that can be derived from Africa. And then you distill it down to Nigeria, there's a challenge there. What that means is that we need to be very, very focused about creating value-based products. Ajibade alluded to that, right? There's the fintech industry, there's payments, which is arguably saturated, but there's still a lot of value to be derived because there's still friction in this market. But beyond payments, there's obviously lendtechs, redtechs, insurtechs, crypto, and the likes. The thing is, it is still a nascent industry. So what that means is somebody has to do a lot of the heavy lifting. When you see other people in the market that have tapped in and identified an opportunity and demonstrated that there's value to be derived, it makes it easier for other people to enter that market. But naturally, if someone is going to enter this greenfield terrain, that means there's a lot of work that needs to be done to derive value. And it's not always first movers' advantage to win. sometimes you can learn from that first mover, and the second mover can win based on the knowledge derived from that first mover. So, in a nutshell, data is a problem in Nigeria as well. So, being that first mover to take that high level of risk, it requires a level of comfort, and it requires the necessary capital funding as well. Um, some of that is being solved by some foreign firms that have tapped into some value and see that that can also be distilled into the Nigerian market. But of course, it's up to us to support ourselves, local funding, to invest in these smaller fintechs that are tapping into some problems that need to be solved in Nigeria in moving us forward as a country.
So I think a good summary of that would essentially be, hey, even within the even within the payment space that looks saturated, there's still so much more value. And we can tell that because there's still so much more friction even within payments itself.
Absolutely. I mean, according to McKinsey, I think in 2020, the fintech revenue industry was about 4 to 6 billion. And by 2025, it will be 30 billion. So that just sort of shows the value and the potential that, we have across Africa.
And so I think just to write off of what Kofu just rightly said, the question then comes is, even as there's value still within payments that we've not yet tapped into, but concentration does have implications for profitability nonetheless, right? And so that's another. I'm voicing this out as a thought. So that's another issue that fintechs are going to think about, like profitability, as we get even though we're tapping more value, but we're getting increasingly concentrated, and so it is hitting your impact on profitability. So that's a thought I'm going to come back to. But I did want to make sure that if there was additional comments on this question, I don't want to.
Yeah, thank you, Chair. Just picking up from the last two contributions, to start from there, I think the first thing in terms of solving the problem of scaling and profitability, one of the big issues, I want to echo a tweet of one of our fintech gentlemen, Charles Dairo. One tweet some weeks back, he said something like, is your product a painkiller or a vitamin? I think it's a very perfect analogy. If your product is a vitamin, a nice to have, when you're not solving a really big problem, it's unlikely that you are going to scale. If you are solving a really big problem in terms of a painkiller, that's the foundation of scaling and perhaps even the challenge of long-term profitability. But speaking to a couple of the issues around the profitability of the African consumer, why it could be a particular challenge. For example, in Nigeria, the first thing from our business, from our business at OP, is things like the cost of access. In an offline business, that's a major component of our business, for example, where we deploy POS terminals. These are dollar-based costs. A POS terminal at $60, $70 implies that if all the merchant acquiring solutions in Nigeria are going to be strictly based on this kind of $60, $70 solution, it will limit the kind of addressable market we can reach in terms of profitability for all of us who are involved in merchant acquiring. So if we're going to solve and scale the merchant acquiring business in Nigeria market, how do we get the MSMEs where the cost of acquisition, the cost of access to those markets are much lower in tandem with the kind of revenue opportunities of those kind of MSME, for example? The second thing, of course, is infrastructure and ecosystem. Our e-commerce players have learned the hard way that they have to do logistics along with their business. These are additional costs. If they were running, for example, in Europe, they would not have had to do such investments. Infrastructure costs also in terms of payments on our business, we've seen in terms of things like higher KYC, higher compliance, and higher risk management costs. In a country where only 40% or 30% of our people have formal digital identity. Digital identity is the foundation stack for credible and trustworthy payments. When we do not have it, it means KYC cost, compliance cost, risk management costs are much higher here compared to Europe. The other things are things like the geographic disparity of Nigeria. Lagos is not Nigeria. The ecosystem complements that you have in Lagos is not what you have up country. So as you move out of Lagos, the cost of some of the things you want to do, business cost of acquisition begins to get higher. The other thing, particularly for, and speaking to, we know a lot of people are online, addressing the mindset and the dichotomy that valuation and profitability are mutually exclusive. If there's a lesson we should learn over the last 1 year, particularly, is that building a path to profitability, even when we are building valuation and scale, getting our unit economics right at customer level and at product level is very fundamental into building a valuation that will last and be sustainable. These are some of the things, those kind of mindset issues that I just want to acquire and scale. Scaling for what? Is there a path to profit in the business that you are scaling for? I think those are some of the issues that we should, that touches on profitability and scaling, for example, in terms of peculiar issues in our local ecosystem in Nigeria. Thank you.
Right. Thank you so much for what you've shared.
Maybe if I could just quickly add to that, taking on from where Olu's talked, the opportunities are endless, but it's addressed the issues around why aren't we going for those opportunities? The environment of risk, that's one. You want to be in safe harbors and do what others have done, but like you said, concentration therefore challenges profitability. But the honest truth, though, is the opportunities here are still elastic, like Ofu said. Just think about it. Okada business, right? As concentrated as you think it is, what they are pushing for is the last mile consistently. Bring that into payments. You begin to see that there are many things you can do around that. And just from ferrying people, they ferry goods, they become courier companies. The same thing happens once you're talking about the flow of funds. You just see that so many things are around it. So talking about scaling, the first thing is the mindset with which you start off. Then awareness of your environment and the opportunities. And one good thing we've seen recently is, since we're talking about the industry, we need to be responsible for ourselves and to ourselves. And kudos to the guys who championed the startup bill, because that's about recognizing this environment. And so we need to do a lot more for ourselves. Collaboration is the next thing. Olu just mentioned the cost of acquiring devices, $60, $70. Think about that value chain. And if everyone in there were going to be part of putting a system in place where you have someone who's producing that right here, even if you're taking $5 off it, everybody benefits. So the issue about profit, keep trying to reduce costs. But then you talk about the environment of increasing inflation. And that's another thing we need to speak to. For too long, everybody keeps looking at the cost of transactions without looking at the cost of making transactions happen. So while the cost in the operating environment is going up, everybody keeps saying transactions should be free. Sitting on what environment? So I think we need to speak to that as well, since we're speaking for the industry. So advocacy is a platform that must bind us to speak to common issues, to look to extending opportunities. You can't grab it all. And that's one of the things we're beginning to do. Ecosystem play is going to continue to be critical. Ecosystem play alone can be very massive. Then you want to reinvent the wheel. What someone has done, you want to reproduce that. You're not creating value. Why don't you leverage on what someone has done? And that's ecosystem play. And now we're all in the API game. If someone is already doing it, and you plug in, the costs are going to get lower, everybody benefits, margins can grow up without actually pulling environmental levers. And when I talk about looking at the value chain and what you can do, just think about data. You were quoting McKinsey. Who's the authority for fintech data in Nigeria? Stays, right? I don't know, I'm just joking. But just think about it. And Olu had also alluded to that about data. One of the things we did, you're in payments. What are people getting paid for? And you mentioned credit, access to credit, digital identity. Everybody forgets that every footprint of salary payment is an identity for creditworthiness. And today, we've got about 50 people who provide financial services who are plugged into us, and the only thing they're looking at is the value of these people. How do they get paid? What do they get paid? And you begin to see the responsibility items because you already can map those within that ecosystem. So the cost of lending gets increasingly lower. A lot more people are going to get attracted to that. And that's about creating value. Thank you.
Thank you. These are all very valuable. These are all very valuable thoughts. I want to turn it over to Aitwas to get her input as well. But before I do that, I just want to do a quick recap because I think a lot of value has come from just a small part of our conversation. Yeah, just a small part of our conversation. One of the things that I'm taking away, and I think this is necessary for any fintech operator in the room, is when you're thinking about scaling, you have to think about how am I going to balance the cost of operating with the money that I'm going to get in. And Mr. Komu rightly, he listed out a list that I think was a quick rough checklist for me, which was what are the things that can drive up your costs as a fintech? One of them is just building infrastructure, right? One of them is just getting access to data that you need to do your business, right? And then other things is just like geographical disparity and the fact that a lot of the expenses we're making because we're not an industrialized, we're not an economy that produces what it consumes. A lot of the expenses fintechs need to make are going to be dollar based, and that's. For example, was the POS, and that's necessarily driving up your costs. And some of the solutions that actually came from what you shared, Mr., was basically around collaboration can knock down the cost of how much you need to do, right? So getting out of that mindset of I must do it all. And then data was another thing that you echoed again. And so I want to come back to this talk of data because I'm very biased. Like you can't say data and have me keep quiet. So I want to come back to this cost of data. Like what is going on? Why do we have this gap for fintech? But I do want to turn it over to Aitwas to get her comments on this, and then I'll take it back to Ms. Ajibade. How do I hear?
All right, thank you very much. And a lot of interesting thoughts have been shared. However, I'd like to look at it from two perspectives. The first one is ecosystem development. I'm an advocate for ecosystem development, and I think that's what I've been doing in the last 3 years. A lot of things are happening in silos, and when that continues, the cost of service to the end user will still be very high. My personal experience, I couldn't get to an ATM. I hope you can hear me.
Yes, very well, loud and clear.
Okay, so I was in a location and there was no ATM and I needed cash to do that transaction. So I walked up to one of the POS agents and I tried to withdraw from that POS agent. She said, how much do you want to withdraw? I said 20,000. I said 500 naira. Of course, that's what is obtainable today. I was taken aback. The cost of service is still very high. I think that there is room to create more innovative solutions. I don't think that for us to scale, POS is the only solution to withdraw cash apart from ATM, to transact, to do business. I think that there are services you can put in the hands of merchants that are lower than the cost of POS. We know that our economy is highly dependent on dollars, and so it keeps driving that cost up. We have an industry innovation sandbox today, and we see a lot of people come up with genuine ideas on how to drive payments. However, they need to collaborate with incumbents. And in collaborating with incumbents, some incumbents are selective in what they will collaborate with and what they will collaborate on. I think that if we have a system and a structure, an ecosystem, right, to harness these products or to harness these ideas and drive them across the value chain, there will be immense value. The second thing I will talk about is the willingness to pay. So you offer a service, and finance data, which most of us rely on in the financial service industry, have shown that some customers complain about costs, or they don't even have any form of income. And of course, if you don't have a form of income, there's no how you can even want to participate. The third thing I will talk about is what the MD of Open Finance mentioned, creating value. If you create something that resonates with my life, that resonates with my culture, that resonates with my sentiments, something I cannot do without, definitely I would want to use that service. My willingness to pay is how you delight me and how much I can afford to pay for that service. These are some of the points I think that we need to be discussing. How do we democratize innovation, for instance? How do we make innovation in Nigeria second to none? How can we create a unified platform for early founders, for young startups to do stuff? These startups want to coexist with the incumbents. Yeah, they want to collaborate, but they also want to coexist. Coexist in the sense that they want to have their own identity. They don't want to be so another. How do we create that kind of platform for this to thrive? And then some of these challenges around demand. The success story in FSI today is when we started, of course, we're trying to grow our community. Today we have about 6,000 innovators in 3 years. What we did was to work with incumbent players. We worked with existing partners. For instance, we worked with a developer community, right? And the first event we had, our community grew from 100 to 1,000 plus. So that's one way to even scale in terms of services. So those are my few thoughts for now. Thank you.
Yeah, thank you, Aitwaz. I think one of the big summaries I take from that is basically one of the things one of the challenges to scaling is not having enough ecosystem platforms where people are exchanging thoughts, also sharing stories and mistakes, and how we can collaborate to find better solutions and not repeat the same mistakes. Thank you so much for that, Aitwaz. I do want to give it over to you, Mr. Ajibade. I think you had a thought on this.
Thank you, Lisa. If you are following all the speakers, we have all said almost about the same thing. We understand the challenges, and I want to say congratulations to all the startups in this room, because last week the federal government just passed into law the startup. It was the bill before, it's now the act. The Startup Act speaks to the challenges startups are facing, from government policies to regulatory bottleneck to high cost of doing business, access to funding. And then it addresses the gap between government and startup and their operating costs, distribution as well, infrastructure that Mr. Oluwakomo of OPE spoke to. So the Nigeria, we are moving in the right direction, that's what I want to say. And that same policy is now left for us to harness and drive it to ensure that it's working properly. What we have done in Wema Bank is to create a partnership desk that provides distribution, infrastructure, and wholesale banking to potential partners like startups. Now, the wholesale banking is not your typical retail banking or commercial banking or corporate banking. It is wholesale in terms of we understand your business and the cycle of your money. You are not a settlement bank, and then we are a bank, but we can avail to you some credit facility as such, not a credit facility, because we understand the cycle of your settlement scheme. So you can have access to your money even before your money comes in. And I think that's a step in the right direction.
Right. Thank you so much for that addition. I think one thing I want to pick back on and double back on is we've not listed a number of challenges to scaling, to increasing rapid customer growth as fintechs. One of the challenges I did want to drill down on is the challenge of data, and basically the challenge of not having available data in order to make your decisions, coming in newly into the ecosystem, or even sustain your business as an existing fintech. And so I do want to get thoughts from around the room is, what exactly, one of the questions you asked, it was a rhetorical question, was who's a standard in terms of standard industry provider of industry data now? It can either come from public, it can come from private. If you look at America, you have public services that provide data, and then you have private services that come in. Now, we can't wait on public, we just can't, because fintechs need to grow. And so the question is that why isn't that second tier, that second option, why hasn't it materialized in terms of being the central bank for data for fintechs?
Well, I think that goes back to the issue of advocacy I mentioned earlier. As an industry, we must know the things that drive the industry, and we must go all out for them. And we're so fortunate that the central bank's disposition over the recent years has been one of openness. And so, many times, all of us report transactional data. Nobody's processing, nobody's analyzing. And that's a value point. Just talking about opportunities and extending them. So just imagine the number of fintechs who are getting to be regulated. All of us send data to the CB, and so what next? What next? Imagine someone steps in there and says, for the industry, we're going to be processing and analyzing this data. We talk about geographical distribution. Today in Nigeria, we know about the cost of fuel distribution and why we have what is called the bridging cost, if fuel is going to go to this part of the country. If you're going to extend financial services to some part of the country, what's the minimum cost? Who's going to interpret that? You can only see your own cost. So, starting point, where are the data sets? Second thing, who's going to take responsibility? And I'm thinking as an industry, we can write that and agree amongst ourselves. We think this is important. In fact, we want to sponsor a startup to take that on because that becomes available to everybody. It's a data pool, it's big data, we're monitoring consumer behavior. Like I mentioned earlier, the kind of thing we're doing today, it's just amazing. There are people who have worked in different places for a number of years, they're still finding it difficult to have access to credit. Why? Because their data is not digitalized. They still go to many places and they're asking for paper evidence. And you're just making this available on USSD to a swath of providers. So from transactional data to analysis of data to sharing of data, then that gives insights. And so that also says the collaboration is not just within us, within the industry, it also extends to government, to regulators, who are more than willing in recent times to accelerate this industry. So the ball is in our court.
I think one of the practical points you picked up is even established players sponsoring a new player to just focus on this problem of aggregating data across for fintechs. I think the very first conversation I had coming to this room, one of the things that was shared is like, the amount of fraud that happens today. The fact that we don't have a place where we can go and see that this number, this phone number, or this name, Paul, is someone who's known to have hopped between platforms, in order to be able to defraud them or to be able to try to get loans. We don't have a data bank that can tell a fintech that. And so that's useful. Before I continue, I did want to ask, is there anyone in the audience at this point in time that has a question, like a burning question you want to ask at this point in time? I definitely don't want to leave you out of the conversation. Yes, the lady in the red.
Good morning, everybody. My name is Titi Layo Aino Scott. I'm a technology and innovation lawyer. I will and the problems that have been discussed, but I want to highlight a particular problem, which is the fact that some of these solutions are actually not known. I visited the exhibition stand yesterday and I had some solutions that I would actually need for my own business, but I had never heard about them before. How do we solve that challenge of getting the products to the consumers? I know that putting up billboards like the CUDA and all that may be expensive, but there has to be some way to get people to know some of these solutions and be able to use them. So that's my own contribution. Thank you.
Thank you. So your question is around how is there a way for us to extend reach so that the actual audience gets knowledge of the solutions? Yeah. So I don't know if there's anyone in particular that wants to take a stab at it. Mr. Ajibade, please.
Anybody go for it. You are a partnership person.
Thank you very much. So, yes, it's a big problem. Most times you have to source for information yourself. But some organizations like FSI, that's I that I spoke earlier on online, they are doing things around collating fintechs and fintech-led organization. You remember that, recall that it's not everybody that is in financial technology. There is edutech, insurtech, tech, and every tech that is available like that. So they are trying to create a compendium of database of people innovators that are trying to digitize various journey across the various verticals that we have. Like you said, there's no particularly known avenue to go and find out where this person is. But you and I, we are hustling. We are trying to push our solutions out there. It's a tough one, but we'll get there. If you listen to Akim very well, it took us back 20 years memory lane of how terrible it was then. The fintech that we celebrate today, some people were trying hard to build it that time, but today we are happy and we are here today. With the newly signed startup bill of Setup Act that was signed last week, if we all jointly come together and see how we can actualize that bill, at least we'll force something good out of government. Thank you.
Thank you. Thank you.
Let me speak to some of the earlier issues around sub-centralized data, how we cannot complement ourselves, and speak to our fintechs who are into credit. Today, the fintechs who are into credit are not mandated to submit their data by regulation to the credit bureau, unlike the banks. Meanwhile, the new generations of customers that are being served by these fintechs are those who have been traditionally excluded by banks. So it implies that these new fintechs who are into lending, they are building a new set of data on customers whose data, whose credit story, credit history, no one had known until now. Unfortunately, they are keeping this valuable knowledge to themselves. The total ecosystem will benefit if this new generation of data is also put into the credit bureau system so that we can all collectively as an ecosystem manage down the cost of risk. Because if I do not know, the same customer is going to different A, B, C fintech, and each of them will treat the customer in isolation. Meanwhile, there will have been some data of credit history somewhere that could have helped to assess the risk much better, and also price the risk much better, and even give a better interest rate that's affordable, for example, and get many more people to access credit. So these are some of the things that we are here that we can all do together for the benefit of impact of the fintech community. The other thing that I think it's important to throw it in now, is on digital identity programs. So recently, there are 90 million Nigerians today who are now registered on the national with NIM, National Identity Management Register. This is a big news. At the rate at which NIN has grown over the last 4 years, it implies that we will have 100 million Nigerians with formal digital identity by 2023. It has big implications for us in fintech. What it means is that for the first time, we have the possibility of having 100 million Nigerians with formal identity and formal bank account or wallet. That changes a lot of things. It expands the market, it expands reach, it expands inclusion, it makes credit, lending, payment, all sort of services to scale in different dimensions. Because a lot of us are listening online, I want to throw a challenge to all of us. What are we going to do as patriotic Nigerians to convert 100 million Nigerians with digital identity to formal bank accounts by 2023 and change radically the pool, depth, and reach of the fintech ecosystem in Nigeria? If we solve that, we'll also be addressing the issue of valuation for valuation's sake or valuation for social impact, where every Nigerian can feel that fintech has actually touched them and we've included them in the opportunities of the former financial system. Thank you.
Thank you. Very, very valid points. Yeah. So I think you've made a very valid point, and I think nothing screams scale as well as that number, 100 million by 2023. And so the question, what I'm hearing is that digital identity is like it has a leg up being solved because we're seeing the work. With NIN, we're seeing everybody like your phone. You can't call certain people unless you get registered with INN. We see the work being there on the digital identity front. Now, the other bit of data that the work is now not being done as fast is data on credit behavior, and especially data on credit behavior that fintechs have. That fintechs are keeping. And so the question is, we're clapping for the 100 million that we're going to get, but if we don't have the right data on them, or we don't have the habit of collecting and sharing data, how valuable can they be to us? Because at the end, for a lender, you make money by being assured that you can get money back. You don't make money by sharing money. And so the question is, there's something that's clear here. There's a hesitance to share data? Because we're all aware we do need it, but there's a hesitance to share data. And so can we talk a bit about, so before we go ahead and talk a bit about how can we solve for that hesitance that people naturally have? How can we deal with the hesitance? I do want to turn it to see if Aitwaz had any input at this point in time. I don't know if she's still there.
Concerning data, I agree. The two speakers that have spoken, Mr. Olu and Mr. Ajibade, that there's a need to harness the existing data that we currently have. However, beyond harnessing the existing data that we have, we also need to do the dirty work. So what do I mean by that? There's this African Development Bank story. They were looking at how to address the gender gap, financial inclusion gender gap across Africa. And a case in point is the Zambia story. 80% of farm holders were female, contributing to food, contributing to food supply in Zambia. However, they were not financially included. What Kula did in providing agricultural insurance was to get closer to them to understand their pain points. So they put all of that data together as primary research, and they discovered, and they tied that to the pain points of these people. They discovered that during some harsh weather conditions, maybe flooding and all of that, their crops are eroded. And so they created a solution, a product to solve that problem. Somebody in the audience talked about awareness. I agree with her absolutely. There's a lower level of awareness on our products that are best suited for these people. So in harnessing the existing data, yes, it's important. The telco data, I think, is very, very important for the ecosystem to grow. But I also dare say that I think that some institutions have a competitive edge with data, and that might be one of the reasons why they may not be willing to share what they have. If you even look at the ecosystem, I may be wrong, but my opinion is this: when any service is launched, right, maybe from the central bank, for instance, or even from the Nigerian bank settlement system, the first point of call are the traditional banks. And then they forget that they are fintechs, and they also, maybe not deliberately, right? They just test it out first, that they are fintechs, and they're even microfinance institutions. I'm not an advocate for everyone in the ecosystem who has a great idea, or who's doing stuff, or who's solving a problem to go and get a license. But I think that they may even have some information about certain markets. The transportation sector, for instance, Lagos alone, look at the value chain in Lagos, the transportation sector. That's again a number of startups trying to do stuff, how to digitize that. But that data is sitting somewhere and maybe sitting with governments. How do we harness all of that? Some persons must be championed, right, with these tax to say, okay, how can we harness this data? If you look at BVN data, 50 million. And I also do not think that everybody needs to have a bank account. I think they need to have a financial account, a transactional account. What I hear from people at the bottom of the pyramid is, oh, when you pay 2,000 in my account, you pay 1,000 in my account, the bank deducts 50 naira. That 50 naira is stamp duty. To you and I, it may not matter, but it matters to those people because every naira they have, every kobo they have counts. So I think that when we look at financial inclusion broadly again, we should be looking at accounts that CBN can recognize. Wallets can have BVN on them. So beyond the existing data right now that we are not harnessing the benefits, which will likely speak to those who are unbanked, we have to also be thinking of data that speaks to those who are not unbanked or those that are underserved, like the telco data, for instance. How do we harness the opportunity there? And how do we create products to solve their problems? Thank you.
Thank you, Aitwaz. Thank you for that contribution. So basically we're not looking at how do we extend, the amount of data footprint we have to the unbanked. So I want to turn again back to the question on the hesitance. How do we solve for the hesitance to share data? So once I get feedback from even the panelists, I'd love to open it up for some of the audience. If you have thoughts around how we can practically overcome this hesitance within the fintech ecosystem to share data so that data is available for good use.
Maybe before then, if you don't mind, the question she'd asked.
Yeah.
how do we get people to be aware of what the fintech innovations are? Because you were speaking about revenue and profitability. If you're creating product for product's sake and no one is buying, you're not going to make any money. And that's one of the things I think Fintech Nigeria exists for. And I think we should give them a big hand for that Fintech Nigeria Association. And they're creating a platform that's making it cheaper for every person who identifies with them to have a broader access to market. So the cost, if you're going to advertise yourself, is just being crashed. Part of the marketing cost we talked about, because that's just cheaper. You get to be a member of the association. They're having virtual events. They're pushing your logos, your product. They have it everywhere. And that's one of the things that collaboration does. And FinTech Nigeria is just less than 5 years, right? And so we see this as a very viable platform. We identify with this very fully. And so the young guys, we need to go after them. Like Aisha said, this is going to crash your cost in many ways. You're going to have mentoring. You're going to have lower cost of marketing. You're going to have exposure. And then you're going to have access to secured funding beyond Nigeria. And that's one of the things that we're going to continue to do. Thank you.
Yeah, I think FinTech Nigeria deserves another round of applause. I mean, that's a lot. That's a whole lot. It's not being okay.
Yeah, I think beyond what Jeremy has mentioned, the opportunity to collaborate as well. I think one of the factors with regards to sharing of data is trust, right? The market is very competitive, and the drive to scale and to acquire merchants, it's a very tough challenge at the moment. So there's this distrust amongst merchants in terms of, oh, if I do collaborate, what does that mean in terms of sharing my customer data, et cetera, et cetera. But the reality is it has to happen, right? There will be some consolidation in the market over time. With regards to data, we do have firms such as NIBS, Nigeria Interbank Settlement System. They actually are, partially owned by government, but also by the major banks in Nigeria. They collate information and they have dashboards where they share reports. However, as Jeremy mentioned again, this information needs to be distilled down to a more granular level where we can use it for value-based product creation. So it does exist at the moment, and also leveraging B2C fintechs and their virtual wallets systems, of which Woven Finance provides, by the way, from a B2B platform perspective. Those B2Cs can go out into the market, into unbanked market. They can find, innovative ways to tap into them, bring them into the financial realm, get their information, and over time convert them into the core financial system. But, the boundaries or the boundaries to getting bank accounts initially are the fact that, KYC, et cetera, which is why things like virtual accounts, wallets are there to simplify bringing them in, simplify financial inclusion. So it's a journey, and I think we're definitely, along the right path with the Nigerian Startup Bill, NIBS, and then more collaborative sessions such as, Nigerian FinTech.
Yeah, I think one of the things that you share that I think I resonate with is even when the data is available, like when you reference names, sometimes it can be so aggregated, you're not able to drill down to what you
mean. But it is available right now. Yeah. So there's a charge for fintechs actually to take that data, collaborate, be sponsored, and drill down so that can be distilled and used for value creation and value-based product creation.
Absolutely. Thanks, Koko.
If I could add something quickly, because the clock is running. One other challenge we should not mention to speak to is the challenge of governance and compliance. The chart presented by Akeem about how the industry has grown big time, over 20 years. One of the messages to us in the fintech community, which we should all collectively heed, is that the scale of fintech today is now big. Some of us in fintech are moving payment volumes that are bigger than some banks. And what we are being told is that the standards of governance and compliance expected of us can no longer be the small startup of a few years ago that is just a small business. And we have to grow up and behave in terms of governance, board, compliance, like, even though we are young, adopt very quickly some of the mature practices of compliance, of governance, of good board practices. Is one of the challenge. Because we are young, we tend to say, what do they mean? We are not used to it because that's not where we come from. But we have to. because we are now big enough. To whom much is given, much is expected. How do you say it? Bigger, to to whom much is given, obligations that we have to grow up to, given the size of our performance in the ecosystem today, in terms of governance and compliance. I think it's one of the things we've got to put in the bucket as some of the things to address in terms of the challenges of the fintech ecosystem in Nigeria. Thank you.
So the point here being, yeah, I'll summarize and get it. So the point here being, basically, fintechs need to grow up, right? Now, as a startup, your first thought in your mind is speed. How can I run as fast as possible, grow as big as possible? Which is great because it's given us a valuation that Akeem dramatized for us, visualized for us. But then the counter side of that is putting those controls in place so that you're actually creating a company that's worthy to be trusted with people's funds.
Exactly.
Yeah.
And engage those regulatory engagement with an open mind. Because we need to engage those regulatory engagement with an open mind. There is a Steve Covey principle, 7 habits of highly effective people. Seek first to understand before being understood. It applies to regulation. Seek first to understand where the regulator is coming from before the regulator will understand you, because the regulator tends to see a bigger picture than your business. We, because we are young, we tend not to see, we only see our space. So these are some of the challenges of growing up, and we have to grow very quickly, all of us, given the size of our businesses today.
Thank you.
So from my side, it will be around beyond the data that you collate. I know organizations or fintechs, they find it difficult to have reported fraud cases because you don't want people to stigmatize you or label your platform as being porous. But in reality, we need to come up with, like Kofo said, we need to have a database where we report cases of fraud so that we can identify that guy who is feeling smart, hopping from one application solution to another and defrauding people up and down. We know his BVN, we know his phone number. At CB level, we are trying to advocate, or one of the advocacy we are passing across is to increase the measures applicable to fraudsters, which beyond bastardizing the person's BVN, that will not allow you have access to financial solutions all through, because without your BVN, there's nothing you can do. We are extending it to NIN. And you know, when your NIN is bastardized, that means there's no phone number for you. That means there's no international passport for you. So you can't even leave Nigeria. You are more like in a cell. So beyond getting those data, we need to increase the measures applicable for fraud or identify frauds and the foster so that they can keep away from this our industry. Otherwise, they will ruin all the good things that we are trying to achieve.
Absolutely. And it all goes back to data. Data to tell us who's a good guy and who's a bad guy.
Absolutely.
Yeah, absolutely.
I think on the last note on that, Olu had hinted on regulation. Yeah, regulation. And that's something we shouldn't leave here without talking about. Many times we think regulation is punitive, but it says if you want to run fast, be sure you're not running fast to remain as a child. You want to grow, because we started this conversation about scaling. With scaling your business comes certain responsibilities. You assume some criticality within the ecosystem. And that's why you will hear about some banks and they call them too big to fail, because it has systemic implications. Today, you now have some fintechs. I mean, you can't afford for them to go down. And that's why they need to also extend their footprint into other fintechs within the ecosystem. And so there must necessarily be an interface, an active interface, which I'll throw the challenge back to FinTech Nigeria. There must be a platform of constant engagement with regulators, and that will be the central bank who continues to open up. That will be the SEC. A number of people just took a backseat when it came to digital assets and digital currency because we never understood that. If we're not understanding those things, building opportunities around them are going to be challenged. Operating those opportunities are going to be challenged. And then it's going to have implication on the kind of things we can do in this environment. And so the issue of regulation, be aware of those regulations. And thankfully, many of them are also being put together. I know some members of FinTech Nigeria, some law firms who are doing that. So the starting point is you want to start a FinTech. What are the regulatory guidelines? And there's just a number of them broken down for you to understand. The next thing then will be understanding where the regulator is coming from. You cannot regulate innovation, is what we say many times, but the regulator needs to understand the innovation and how it will not challenge the environment it regulates. So that interface must constantly happen. When e-Naira came, a lot of people just took a backseat. What position did we take to say, well, you can't stop this. What can you do with it? And so we were able to liberalize that for Nigeria today happens to be the first country on the African continent where you got the CBDC. We've been part of that. You take it to the next level of economic advocacy. If anybody wants to implement CBDC in Africa today, Nigeria is the go-to place. Who are the people to get it done? The fintechs. And so these opportunities just continue to be there. So I don't think we're limited by opportunities. I don't think we're limited by ability to transform these opportunities to revenue and profit. We need to do the necessary things and take responsibility for ourselves.
Thank you so much. Thank you so much for that. I think the summary of that is basically beyond even events like this where fintechs connect with fintechs, investors connect with fintechs, we need connections with regulators that are constant and not one-time basis. I think that's valuable. Well, the time is up. I have to forego my standing ovation because I ran out of time. But nonetheless, thank you so much to Mr. Ejibade, Mr. Afamu, Mr. Rolo, and also as well Mr. Tanda for an awesome, wonderful session. Thank you.
Pictures, please, and I'll ask the president and the COO, the vice president, and any member of the board of trustees of Fintech NGR to please come join them for pictures. After they take the pictures alone, please, I'd like you to come to the middle, take pictures. Thank you.
Ladies,
Thank you very much. Now, something I noted, there was so much in that session that was focused on challenges in the fintech ecosystem. We heard the panelists talk about different challenges, including infrastructure, data, marketing, and so on and so forth. But for me, the major takeaway was something that Deremi said, which other panelists also echoed, talking about the need for collaboration. And in the famous words of Steve Jobs, he said, great things in business, Steve Jobs said, great things in business are never done by one person. They are done by a team of people. And for that reason, I think it's important. They already did that. But I think I'd like us to do it again, to appreciate this platform that has brought people in the fintech ecosystem together to brainstorm, to co-create solutions, to market their businesses. I think the Fintech NGR deserves another round of applause. And maybe we can do a standing ovation for Fintech NGR. Please, let's celebrate the Fintech NGR for this platform for collaboration for all members of the Fintech ecosystem. Thank you. Thank you, ladies and gentlemen. And please remain on your feet. May I ask that we please remain on our feet, ladies and gentlemen. Please let's stand for a bit. We just want to make sure that we are fit. Standing ovations are good for two reasons. First, we appreciate our speakers and the people who are celebrating. But the second reason why standing ovations are laudable or are good is because they help us to stay fit. and we sit for a long time. So when you stand to celebrate someone, you're not just doing them a lot of good, you are doing yourself a lot of good, because we've been sitting for over 50 minutes. So please, let's just stand, stretch our legs, and give a handshake to somebody beside you. You could give the person a high five. You know, in local parlance, we call something chop knuckle. What it means is the fist bump. So please give somebody a fist bump, say hello, great to see you again. Just use the opportunity to stretch your hands, stretch your legs. A little bit of networking for about 2 minutes won't do us any harm. Let's network, meet one another. Thank you. And our virtual audience are not left out. In the chat feature or on the chat feature, please drop your location and share your learnings so far. Thank you. All right, please let's take our seat. Please let's take our seat, ladies and gentlemen. Please let's take our seat. Thank you. We're set to continue conversations. All right, it's now time to bring up the next speaker. Please let's take our seat. Thank you. Now, the next session is focused on learnings from APEC. And APEC is the Asia Pacific Economic Cooperation. Now, APEC has carried out a research that's focused on the role of fintech, the role and opportunities for fintech and regtech. Now, this research has some key findings that are relevant for Africa. So there are a lot of key findings from the research that are relevant for Africa. And today we are very privileged to have the person who led this project in our midst physically. So ladies and gentlemen, join me as I welcome the APEC Research Project Lead and Digital Finance Advisor at the IFC, Andrew Davis, as he takes us through the learnings from APEC. A round of applause for Andrew Davis, please.
Thank you, and good morning, everyone. It's so great to be here. And in fact, this is my third time to attend Nigeria FinTech Week since 2017. I guess what really excites me, though, thank you for that, what really excites me is to see people getting together and physically coming together versus all the virtual events we've had over the last 2 to 3 years. So I'd like to take a few minutes today to walk you through a project that was undertaken last year in APEC, and I'll explain shortly who and what APEC is. But I think you'll find that as I work through the findings of this project, there's a lot of relevance and applicability for Africa, and that's why I'm presenting this to you today. So first of all, who and what is APEC? So APEC stands for the Asia Pacific Economic Cooperation. It's a body spanning 21 different economies, and it operates at an intergovernment level. Basically, those 21 economies represent 2.9 billion people and about 60% of global GDP. So looking at the map, it's basically countries that span the Pacific Ocean and includes countries such as Philippines, Indonesia, Mexico, in addition to large markets like United States, Australia, and so on. So in 2020, the Australian government agreed to fund a project for APEC, and I'll walk you through that project now. Go back. So the goal of the project, so before I talk about the goal, I guess what we saw is that during the pandemic, governments all around the world have been digitizing their services and delivering more online. But what we realized is that it was often done in a very rushed way. Government wasn't always considerate of the impact at a social level, the impact at a technology level, the impact in terms of government policy and planning. So this project really helped to identify all of those issues and bring them to the surface. So this project, the target audience is at regulators and policymakers across the APEC zone. And it was really looking at what's the opportunity that fintech and regtech can play to help deliver digital services in a more sustained way, specifically looking at 4 key pillars. And these are pillars that APEC had set as priorities. So for any economy that wanted to become digital, the view was that all of these 4 pillars needed to be addressed. And the 4 pillars there, as you can see, are regulatory and institutional reform and balance, consumer protection and law enforcement, a really important one, improving financial literacy skills and ensuring access to financial services. Can we go to the next slide? Thank you. So the project had 3 main stages. The first stage was to do a significant amount of research across those 21 APEC economies and to develop a concept paper. That concept paper was then used as the basis to conduct a series of workshops. And the workshops really were quite insightful. We had a lot of different central banks presenting on the different digital initiatives that they were taking. And there's one in particular that I'll share with you shortly. And then we could then produce a final report, and the final report had a whole series of recommendations. And in fact, at the end of my presentation, I've got a QR code that you can access if you want to download the final report. So, sorry, just to go back. So the workshops we ran generated a lot of insight. And actually what we had seen is that central banks in many countries around the world were taking proactive steps to look at things around increasing consumer confidence and trust, educating the population around the use of digital services, looking at the protection and privacy of data, and so on. So here's, I guess, a simple list of some great examples from all around the world where we've seen these regulators and central banks being very proactive. Because what they've realised is there's no point rolling out some kind of e-government initiative if the target audience and your population are not able to make use of that. So let me highlight just one of these examples, which is the one at the very top. And this is an example of what the central bank in the Philippines did in support of deploying digital services. So they adopted a program focused on financial education. Their view was that people perhaps who didn't have strong experience and knowledge around financial services, to get them to move online and adopt financial services, their hands needed to be held and they needed to be trained and guided on the benefits of that. So they put in place a framework which is all about partnering with different organizations to basically uplift the level of knowledge and understanding of financial services and therefore make it easier for people to move online. So they had a digital literacy program that had 4 pillars to the program. And the 4 pillars are around the knowledge of digital financial products and services, the ability to protect digital financial transactions from risks, raising awareness of risks in digital financial transactions, and then knowledge of consumer rights. And their view was that if they could address all of those 4 pillars, the result would be increased consumer confidence and therefore people being more willing to adopt some of these new e-government services. So they've rolled out a program. Now the Philippines is about 110 million people in terms of their population, and they've rolled out this digital literacy program, and so far it's reached 29 million people of their population. And they've done that through this partnership model. So the central bank has basically been the driver of this program and the facilitator, but they've not been the ones to execute and deliver. They realise that's not their area of expertise. So they've partnered with a whole bunch of different organisations. And as you can see here, they've targeted teachers, they've targeted public servants, they've thought about small businesses. They're trying to, I guess, reach into all corners of society and the population to benefit from this program. Oh, too far. So, in terms of the project itself, at the end we had 13 recommendations covering a few different categories, and I just want to highlight some of the project recommendations. So in the area of regulation, and just remember that this whole project was targeted at regulators and policymakers. So the view was that there needs to be a lot of collaboration between regulators at both a domestic and international level. It's not uncommon in any country that there's multiple regulators. And in some cases, even those regulators from the same country don't seem to particularly coordinate between themselves or share information that well. So there's a distinct opportunity, but at the same time, as we've seen with the Philippines, there's lots of great case studies and there's lots of great successes that regulators need to become aware of and to share with each other. Another one is, which is recommendation number 3 here, is that our view is that regulators and policymakers need to create paths to market for innovators whilst ensuring consumer protection is in place. So basically what that means is our view is that regulators need to make it easier for new entrants to come to market to offer new products and services. I think in some instances regulators have been barriers to entry of new entrants, but ultimately they need to create those pathways, and that was a key recommendation. In the innovation category, definitely in some markets we're now seeing regulators funding innovation programs, and that's a really beneficial strategy to take. In some instances, banks and other organizations are reluctant to work with fintechs and startups, but as soon as a regulator perhaps initiates some kind of program or funds an innovation activity, that signals to the market that it's a good thing to do, to be working with startups and fintechs. In terms of some of the other recommendations, so in the section of collaboration, we're starting to see that there are these kind of special interest groups that have been formed. You know, regulators are very large in terms of their organizational structure, but more and more regulators maybe have fintech departments. And so now we're starting to see a fintech department, one regulator, perhaps for having a WhatsApp group with their peers, with other regulators. In the area of education, quite a few recommendations there. The first one there is about how regulators need to really promote a lot of education in the market and to help, I guess, define and articulate standards. So, you know, regulators, and we think that's a good role for regulators to play to help educate the market, and to do that obviously without commercial interest or commercial bias. And so in some markets we do see regulators doing that quite heavily. And then the final recommendation, just to highlight, is that fintech and regtech have an important role to play in the digitization of an economy. They shouldn't be seen as something to shy away from. They shouldn't be seen as something to put up barriers against. They need to be embraced and accommodated into the strategy of having a digital economy. So just my last slide, if I can get to it, or my second last slide. So considerations for Africa, I think there's a lot of relevance if you look at the findings of the report. Clearly there are regulators in Africa that are facing the same constraints and challenges and opportunities. But of course, you know, we need to make sure that services are rolled out at the right pace and that people aren't left behind. I think the main conclusion here, or two conclusions, that information sharing and collaboration of regulators is a good first step to take. And of course, to bear in mind that fintechs and regtechs do play an important role. So just to my last slide now, if I can. So I guess just a quick thank you for your time. There's the QR code if you want to download the report. I'm around for the rest of the day. Feel free to come and tap me on the shoulder if you want to discuss. Thank you so much, everyone.
So much, Andrew. Now, I'm not sure if we all heard what Andrew said at the beginning, but you know, I realized something. Andrew has been attending this conference from all the way from Australia, right? And he has attended for 3 consecutive times. He has attended at least 3 times. And I think he's deserving of a round of applause. To be interested in the fintech ecosystem in Africa, he's deserving of, maybe we can do a standing ovation, you know, to celebrate him so that he will come next year. Please, let's celebrate him louder. So that Andrew will come. Andrew, you're welcome. We love to keep seeing you. Thank you so much for making it out here. And thank you. I believe we should leave the QR code on the screen just for about 1 minute so that anyone that wants to, just scan it. Using this QR code, you can get the full report. If you want to read much more about the report, please just scan the QR code so you get acquainted with the report. There's a lot of learnings. I mean, it was done by APEC, but it is very relevant for Africa. So please scan the QR code and just get a sense of what the full report contains. Once again, thank you so much, Andrew. Now, ladies and gentlemen, this conversation will be incomplete if we do not have regulators. The fintech space, and just as I said yesterday, is not complete without the regulators. They are such an important part of the ecosystem. And now to the next session, where I'm really delighted that the chief regulator is around, is represented in this next session. So this session is focused on eNaira, the enabler of the new phase of financial inclusion drive. And I'm happy, as I mentioned, that the chief regulator is around, is represented the Central Bank of Nigeria. And to take this session, I'd like to invite Fadele Adeolu, Assistant Director at the Central Bank of Nigeria. Please, a round of applause. Representing the Central Bank of Nigeria. After which we have Mujib Ishola, the Chief Technology Officer at System Specs. A round of applause for our speakers. You're welcome.
Let's go.
Good morning, everyone. Testing my speaker, my microphone. Okay, so I want to say congratulations to all of us, and especially to the Fintech Nigeria Association. I'm always proud to associate with you. You know I'm one of you anyway. So I want to say thank you to everyone who has been making this a very useful conversation. We're here to talk about eNaira, so I'll just go straight to the point. So we're talking about eNaira as a new enabler of financial inclusion. I sat in the crowd there. I've been listening to very interesting topics, so we are likely to be just repeating those key points because there's nothing new that has not been said. But I wanted to say that in the architecture, in the foundational design of the CBDC, I'm happy to tell you that fintech is actually a foundational requirement. I mean, innovation is part of the foundation of any CBDC, and eNaira has been designed to enable that innovation. And on that note, I think we can start the conversation. I just want to mention that as a regulator, we are all, we're having this conversation today because we all believe that technology and innovation has presented our generation a new opportunity to redesign the monetary system, to go to a higher level of growth, and also to bring in new innovation. That's why we're having that conversation. Now, in building that future monetary system and payment system, the role of the regulator is very unique. And that role is actually to ensure that to ensure that the foundation of this future military system that we're building is secure, is robust, is inclusive, and is formidable. And just to re-emphasize some of the things that have been said, Fintech has been building a lot of networks, but there's the risk of data concentration. For example, networks can, it can result into a kind of vicious cycle where some fintech get bigger and prevent others from entering. But the regulator is there to ensure that there's positive competition and that there's interoperability in the system, and that we can build a system that is scalable and expandable. I think I'll stop on that note, and then Mujid can.
Yes.
Okay. Just before we throw to Mujib to take it up from there, I'd like to, this is an opportunity. We've got a regulator here, so it's a big opportunity. We've got the chief regulator. So if you have questions or you have comments, we're going to open it to the floor for questions and comments. So please note them so that when they speak, you take the questions, you take the comments, and then we wrap up. Thank you very much. Over to you, Mujib, please.
Okay. Good morning, everyone, again. It's interesting you talked about innovation and all these fantastic things. I just want to go back about where this all came from. If you remember, the whole story is about cryptocurrencies and the rest of it. And I think Jeremy on the last panel also mentioned digital assets and digital currencies, right? It was just a matter of time. Technology keeps pushing us forward in terms of us as human beings, and that's just the fact of life in terms of change. What is happening is the redesign of payment systems around the world. It's not about Nigeria, it's what is happening in the world, right? And CBDCs were solving the problem that cryptocurrencies are kind of facing in terms of providing stable coins and the different currencies that are not actually regulated. Now, CBDCs, as we have it now, gives everybody the opportunity to create products and services that actually responds to humans, right? I had the opportunity to go do some financial inclusion research, right? And went to a town in Ekiti. Now, we take a lot of infrastructures for granted, right? There was no infrastructure. There was no bank. I think the nearest bank was about 60, 70 kilometers away, and cash was still being used, meaning that the security of that particular area was just not happening because you just have robberies everywhere because everybody is moving around with cash, right? So all these things we talk about when we talk about digital currencies, they're real in a lot of parts. Now, what the e-naira is doing is bringing the opportunities to bring those guys closer, right, to being able to access these different services and products. We just find ourselves in a situation where I would say Nigeria is leading payment systems and fintech innovations around the world. And you could argue that a lot of the transactions are already digital in one form or the other. This is just the next step forward in terms of issuing liabilities directly on the central bank. Now, the e-naira allows these people that don't have banks, that don't have access to internet and all these sort of things, to be on board products that are designed specifically to cater to things around them. Now, when I was in this part of Ekiti, right, the major thing they do there is agriculture, is yams, really, right? These are farmers that have peculiar needs. For instance, the market just opens twice a week, for instance, right? Specific to exporting these farms, these yams, out of their town. Now, remember, there are no banks, which means that people have to worry
about carrying cash around. And let's even leave that for a second, right? Creating products around that economy itself, right, is something that all of us need to, contribute to. Now, we take it for granted as well, those of us that live in highly urbanized areas, that, okay, there are banks, there's internet, I already have a bank account. These guys don't actually have a bank account. Not that they don't want a bank account, but why would I want to travel all the way 60, 70 kilometers away to get an account? Now, you could argue that there are solutions that are addressing this already, and you would be correct for some part of it, but the e-naira is the next step, is the evolution that that is coming, and we just have to take value from it and then see where we go from there.
Okay, thank you very much. Is there any question from anyone on the floor, anyone who is joining in physically? And do we have questions online as well? Please, if you have any questions, please indicate. Okay, I knew we were going to have enough questions. Okay, from the front, we've got 2 hands. Please, can you pass the microphone? Over there, we've got 2 hands or more. So please appreciate if you would keep it very straight to the point, your name and your question as fast as possible, please.
Okay, thank you very much. Good afternoon, everyone. My name is Elizabeth, and I'm a part of the TTSWG, that's the Telecommunication and Technology Sustainability Working Group. And we basically are driving for sustainability within the different industries, telecoms and technology. And we're talking about financial inclusion. And sustainability has to do with the ESG, economic, environmental, social, and governance. And when we talk about financial inclusion and innovation, I'm also thinking about inclusion for the physically disabled. These people are also included when we talk about inclusion. And I don't really see how most of these innovations are responding to those needs for, say, the blind or the deaf, for instance. How does the e-naira respond to their needs, for instance? With physical cash, there are some monies that probably have braille on them. And I don't see how, for instance, these touchscreen POSs that we have, I don't necessarily see braille services or voice-enabled services on those things. So how does the innovation that comes from these financial services attend to other social, yes, include those other people?
Okay, thank you very much. You want to take a stab at that before we move on to the next question?
Yeah, thank you. It will be unfair to talk about financial inclusion without actually talking about those vulnerable groups. And I would say it goes back to all of us. I mean, considering the fact that e-naira is designed to event that the central bank actually had. I mean, we were really excited to see there was a specific use case regarding the physically challenged, and we are presently driving some sessions with those innovators to ensure that we bring in those functionalities. And yes, the e-naira has been designed for that modularity where innovators can actually seamlessly plug in, and then we can have all these wonderful improvements in financial inclusion. So let me stop there for now.
All right, ladies and gentlemen, please, I'd like us to indicate, because I find that I want to get a round of applause and a standing ovation by keeping to time. I don't want to be guilty of the rule that we set together. So I would like us to indicate if we have questions now. So we note people who have questions now so that questions don't trigger further questions later on. Please just raise your hand high, and then we'll just take numbers 1, 2, and 3. So we just have 3 questions. All right, please go ahead.
Thank you very much. My name is Babalola, Operator Observe once again. Okay, my question is, please, as per the regulation, is airtime prohibited from being a medium of exchange? That's my question. And the reason why I asked is, what my organization does, I'm from Platinum Business Solution. So we have a mobile applications that allows you to transact with your airtime. Your airtime, it's a means of, like If you have airtime now, you can transfer it from one network to another, from MTN to Glo via our mobile application. You can convert your airtime to cash via our applications, and then you can use your airtime to pay bills. So basically, on Tuesday, I was in a meeting with one of the top guys in InterSwitch. Actually, I was in a meeting with someone, so they had to call the lady, one of the top executive person, and he said airtime is prohibited from being a medium of exchange. So I really want to get clarification on that. Thank you, sir.
Okay, thank you very much. So, airtime is not money. To be very specific. So, in terms of what should be used as money, there are functions of money that, there are characteristics of money that should be met. And airtime as a closed network, a closed network asset that is being used within a closed network. What I mean by that is that the telecoms sector is just one sector of the economy. Now money have universal usage. So you cannot use such closed network assets as a replacement for money. You can use them for some wonderful futures, but not as a replacement for money. And there's a lot of things that makes money what it is. And I wish I would have the opportunity to tell you how those things are not inside the airtime. So really, it's not money. But that is not to say that it cannot be used in some way, but not as a replacement for money.
Okay.
So it doesn't have that universal cross. And legal tender, of course, is something we need to educate ourselves about. Legal tender are enabled by law. We have a lot of private money today, but legal tender is in its own category that you have to also understand. So we need to really educate ourselves about these things. I wish I have time to talk about these technicalities, but I'm not sure the time will permit us here. Yeah.
Well, I feel like I'm between I don't know, he says I wish I had more time. But then I'm looking at the timer and thinking that if I say you have more time, you will not get our standing ovation. So unless I'm a person under authority, unless I am told that we have extra time for this, we just may need to work with the time we have. But thank you for your response. Number 2 and number 3, please, can we take the questions simultaneously? Immediately we take number 2, let's take number 3 and respond to them at once. Thank you.
Hello. Yeah. My name is Sally. My question goes to the two of you at a different rate. I might start with you, sir. You made mention of a very good example of a town in Ekiti that infrastructure was lacking, right? So it's fine. Infrastructure is lacking, and essentially that's where fintech comes in to extend to those places where the banks cannot service, essentially, and this gives rise to where we are today in fintech. But the challenge now is, I don't know if you can speak to that, is infrastructure is still lacking. The concept of e-naira, it's still a digital currency, right? And no matter, even if you're not seeing a physical infrastructure, there is a digital infrastructure behind that drives it. So you are talking to the concept of wallets, apps, and the rest. And still, these people in these locations, the digital literacy in Nigeria, number 1, is extremely low. So to use e-naira, for example, I myself that I'm a bit tech savvy, I'm finding it difficult. Okay, I need to get a wallet but an e-naira wallet before I can use it. I have to sign up, and till today I don't have an e-naira wallet because of the restriction in the signing up. I had to go and update my BVN that is lacking email or something. My email is not matching. How does that solve the problem of the common man that is a farmer that probably doesn't even have an Android or an iOS phone, is using something that is powered by USSD? His digital literacy is low, and he needs to buy yam from the same person that doesn't understand that. So
Okay.
how does the INERA come in to solve that in that
Okay.
regard?
Now,
And
because of time, we may need to just take that one so that we can take the third person.
the short one is a very small, it's
Okay, a one-liner.
it's a one-line question. Does INERA have a public API for fintechs to consume? Because without that, I don't see how the fintechs will benefit from it.
Okay, let's start with Mujib. If you can please take it as brief as possible, please.
Okay. The digital infrastructure is still a problem, right? And that's not going to go away anytime soon. But what is good about where we are with the inner story is that the traditional channels, USSD, and is being extended to the agency network as well. Now, part of the things we've done, right, at Remita is that you can actually get your wallet, right, without too many drama, right? As with any product, you learn as you move. But as our regulators have decided to follow us in the learning journey, and we fintech players have been in school for the last God knows how many years, so we've figured out how to do these things in terms of create products that goes retail. The app has come a long way. There's been issues with the kind of things you mentioned, but it's not a problem of inner per se, right? It goes back to that infrastructure as well. I remember the drive behind getting BVN and even getting NIN, right, was fraught with a lot of similar issues trying to sort that out. And this is just bringing that forward for them to be sorted, right? So yeah, in the beginning, we're gonna have these issues, but we've crossed that issue in terms of trying to get wallets and stuff.
Thank you so much, Mujib. Okay, go on. We've got about 30 seconds before.
Okay, in terms of APIs are available, and what we've done at Remita is actually further simplified access to those APIs. You can catch up with me later to get more details on that.
All right.
Okay, so thank you, Mujid, he's the right person to answer the question of API because he is coming from the ecosystem, so he has used the APIs and he can attest to that. So, but I just wanted to say a few things regarding the new drive for financial inclusion. We can see the INERA as actually the effort from the regulator to push the boundaries of the existing cashless initiative beyond where they were before. So new technology is one of the opportunities that has come. So we have new tools to build new possibilities. For example, we talk about offline payments today. Imagine my grandmother in the form of a locket, and she can walk to any kiosk on the street, and based on that locket and backed with her fingerprints, she can receive money. It can be as simple as that. What the CBN has done is actually to, the architecture of this new payment system that will make this scalability, the kind of foundation that needs to be laid for this new innovation to be built. That is, you should see INERA, the CBN do not intend to build all the possibility by itself. The CBN only wanted to build the foundation, that new foundation that has the building block that can support this elasticity. That's all the CBN is trying to do, and that's what the CBN has done. And we can talk about that as much as we have time.
Thank you very much. We'll talk about it. One more, okay. So although we've run out of time, I've been instructed as a person under authority to take one more question. So please include it in our time. Thank you. Please, let's take our one question. Thank you. So whose question are we taking? Yes, please pass the microphone. So we have extra time.
All right, thank you. My question is to the CBN. I want to reiterate, and probably by way of a question also, when we talk about the financial inclusion, bringing it down home for, sorry, my name is Deborah Oni, the managing partner of Hilton Top Solicitors, and I have a passion for women inclusion in the tech space and the emerging technology and all that. And so I want to know what measures is being taken by the CBN in terms of all these various formulations and policies. It's easy to do that, right? But the implementation, and when I talk about women inclusion, I'm going down to not just the women that are in here, but I mean the women in the rural area. For me, on my platform of the Hilton Top Solicitors, we have an aspect that we're already doing something for the women. So what is the measures that are being put in place by the CBN to consider these women to be able to have a full inclusion? And then, of course, the women in the rural areas who probably will have their phones and sometimes lock it all up and cannot transact. They don't even have an idea. And we have to take that intentional step. So what intentional steps are being considered in the various policies that are being
Thank you very much.
formulated? Thank you.
The national...
Sorry, so apologies for interrupting. I've been informed that we can take one more. So what if we take that one and then you respond to the both of them together?
I think this women inclusion thing is a bit critical. Okay. So, I mean, with all respect to the women, we should talk about that. Okay, so so in the whole gamut of financial inclusion drive, we know that there are specific demographics that we're looking at. Women stands out. I mean, to be given special attention, and especially the ones that are, I mean, a bit outside the reach of the financial services. So, you know, in the strategy for financial inclusion, we have this framework for inclusion for women, and in ERA specifically, I will talk about the National Collateral Registry, where we can actually take the movable assets of women. Women always have valuable assets in the form of trinkets, even if it is old. So, and you know, for micro loans, micro access to all these things, we can take all these assets, tokenize them, and make them possible. I mean, make it possible for women to have access to credit. And thank God we can have programmable credit today, isn't it? We can have more, and the risk is driven low. So that's one area that women are targeted in. I mean, specifically, the National Collateral Registry is one area that we are trying to make sure that even the adornment raiment that the women wear, we can use it as a collateral, and women can continue to have access and be carried along, even in INERA. Thank you.
Okay, so one more question. I'm told that we can take one more question from over there. Someone who has been raising a hand for quite some time.
Hello. Good morning, everybody. Good morning, panelists. My name is Aderoke. I'm from the Nigerian Communications Commission. I'd like to speak to Remita. First and foremost, fantastic. You went to Ekiti. But my question is this: how many people in Ekiti know about e-Naira? I know that the Commission has been working assiduously with the CBN to promote and to ensure financial inclusion is achieved. But the truth be told, the speaker before, the penultimate speaker, did say about awareness. That cannot be undermined. Then the second thing is, with a show of hands around this room, how many people own an e-wallet, e-Naira wallet? We are supposed to be the enlightened ones. How many of us? So I can imagine my grandmom, who is in Ekiti, in that market. How do they know, or how will she know what e-Naira is? I congratulate CBN for their 1-year celebration, our anniversary of the launch of e-Naira, but there's a lot to be done. We need to create awareness. You need to let people know, especially the unbanked, what and why I should pick up e-Naira wallets, especially where there are no banking institutions. Then my last summation is to the gentleman in front that did speak about use of airtime. The NCC and the CBN, amongst other government agencies, have discussed this at various fora and at various levels. The use of airtime for transaction is illegal in Nigeria. They only recognize money or legal tender, as earlier said, is Naira and Kobo. So if you're going to use airtime, even with the operators, you cannot convert 100 Naira credit to 100 Naira as it is. There are a lot of factors embedded into that 500 Naira credit. So you need to be educated. If you want to have more discussions, we have representatives from NCC. Please reach out to us. And I'm sure you do not have an NCC approval to carry out that business you're doing. In other words, that's not allowed and it's an illegal business. Thank you.
Thank you very much for your comments. That was the feedback. You want to take a quick comment?
Okay. So there's a lot of local grassroots drive that is happening. I've witnessed it myself in a lot of road shows promoting INERA in places like that. And I like the fact that you asked people how many people have INERA. And I see a few hands. It's a thing of progression, right? I was not around when cowries changed into notes, right? I don't know how that happened, but I'm sure it's the same thing we're witnessing. I remember when cryptocurrency started. I mean, back when I was still mining cryptos on laptops and the rest of it, right? Nobody knew about it. It was just a technology thing. But look at it today. So everything needs time. And we in this room need to begin to critique the design, the strategy, and come up with winning solutions. There's a lot of opportunities. A lot of opportunities can be tapped. Somebody mentioned, creating devices and software for, that has Braille for the blind and the rest. That is a problem to be solved. And nobody thinks about payments. Nobody should really think about payment because payment should really be ubiquitous, right? They just want to buy bread and get onto buses and trains and the rest of it, right? So those are solutions to solve. Now, I believe that before the end of next year, a lot more people are going to have INR because on remittance, more solutions providers do same. Before you know it, things are going to happen. And lastly, if you think about the amount of money we as a nation, right, spend on minting notes, just thinking of that alone for me is enough incentive for me to say, you know what, I'm going to do my bit and try these solutions out. So I think we're all responsible for making this work, right? It's not us versus CBN. We're where we are. We need to move forward. Thanks.
Thank you very much. And on that note, with 46 seconds left, just right there on the screen, we're done with this session. A round of applause for Adeolu, Fadele, and Muji Bishola. I'd like to ask the president of Fintech NGR, the COO, and the vice president to please join in for a photograph, quick group photograph. And any member of the board of trustees of Fintech NGR should please come in to join us for a photograph.
Please, an opportunity to say just a closing remark. INERA is strategically bringing new players into the ecosystem. And who are these new players? The fintech. So please, we cannot have all the time here to on stage, but there's an INERA booth over there with people who are waiting to answer your questions. So, and I will also be there for a while after the session. Thank you for this opportunity.
Thank you very much. So please visit the exhibition booth to see the INERA booth. And the president, the vice president, members, board of trustees of Fintech NGR, and the COO.
Welcome, sir. Thank you, sir. Thank you, sir.
So we're moving on to the next session, but before the next session, I think this is a great time for us to have some icebreakers. Panel discussion. And before the panel discussion, I'd like us to have a quick networking icebreaker. So please, ladies and gentlemen, apologies for making working that is going on. And yesterday we did a video where we said Fintech NGR. I think this time around we can just say NFW in our video. Are we good to go? So please, ladies and gentlemen, if you look to the screen, I'm going to be taking the video from here. And I would just like everyone to echo NFW. And I will try, and I'll appreciate if the video people would also try to cover everyone. So we say NF. Oh, we're not ready. We say NF. NF. So after we say NFW, we then say Nigeria Fintech Week. Can we do that? Okay, something for social media. NFW and Nigeria Fintech Week. 1, 2, go. NFW, Nigeria Fintech Week. No, we didn't quite capture that. I mean, we're at Nigeria Fintech Week and the echo wasn't even loud enough for us. That sounded like just a community's Fintech Week. This is Nigeria Fintech Week. Let's do it again. Thank you, sir. I appreciate. So are we ready? Okay. NFW. Gentlemen, thank you. Please indulge us. Every now and then we want to make sure that you're fit and you're not sitting, you're taking some exercise, you are networking. So please indulge us. This conference is a cocktail of learning and fun. So in between the learning, we'll put in so much fun. Ladies and gentlemen, please let's take our seat as we get ready for the next session. Okay, please let's take our seat. Okay, I would appreciate if the ushers would help just urge and prompt people to please, just for some time, please take their seat as we get ready to continue the session. Thank you. Very important one. It's something that affects the fintech ecosystem. We're talking about talents. Very important. Let me ask a quick question. I mean, just from my own thoughts. Is anybody familiar with the word jackpot? Anybody familiar with the word jackpot? Okay, if you're familiar, please raise your hand. If the person beside you is not familiar, please can you explain to them what jackpot means? You know, I was at a conference and the person said jackpot. I said, wow, that's a touche way of putting it. It's called jackpot. But this session is focused on talents, global talents. And it's going to be talking about how wide the talent gap is. Ladies and gentlemen, please can we take our seats? Please can we take our seats? Thank you very much. Please take your seat. Thank you very much. Okay, so we'll just wait for the people who are standing to take their seats before we continue. Okay? Thank you. We'll just wait for you to take your seat before we continue. Thank you. Okay, so it's a go ahead for me to continue then. Now, the panelists, I'm going to be inviting the panelists, and as is our custom, please give them a resounding applause. First on the list to talk about the sustainable pipeline of competitive and global talent. First panelist is Lekon Akinjide, Director Partnerships at Now. A round of applause for Lekon Akinjide, please. Thank you. We've also got Arseny Tretiakov, Chairman of the Fintech Start Association in Russia. A round of applause for him, please. I believe he's joining virtually. So I'll quickly call up the moderator so that the moderator picks a preferred seat quickly. Lola Aworanti Ekubo, Chief Digital Officer at FBN Quest. Welcome, Lola, with a round of applause. Okay, we've also got Oyin Johnson Awoni, Senior Legal and Compliance Officer at the room. Welcome, ma'am. Dr. Patrick Conte, CEO, Africa Fintech Week. A round of applause for Dr. Patrick. I believe Dr. Patrick is joining in virtually. We've got Bola Olusonya, Chief Country Manager at Tech Experts. Okay, and without further ado, I'll be handing over to the moderator.
Good afternoon, everyone. I think it's a great pleasure to be here talking about this important topic. As the MC has said, this is a really big issue. I think if you speak to, in fact, 10 people today, I'm sure 8 youths will say they want to leave the country. And I think we're all feeling it in our different organizations today. So this is a very important topic, and I'm glad we have key people to discuss this as well. Okay, is she coming up? Are you coming up as well? So we have Uchechi who will join us on the panel as well. A round of applause for her as well. So I'll just let her take a seat. Okay. All right, so just before we go into the discussion, I think it's important to pull up a couple of statistics as to what is actually happening around the world, because this is actually a global issue. I've had a look at some of the research on ground, and we've seen that there's a Conferry report which says that in 2030, we should expect that there's potentially going to be about 85 million shortages in jobs. So, no, actually, there'll be availability of jobs, but a shortage in the amount of people that can actually fill that role. So I think that's a big shortage, and that's over the next 10 years. Now, if we zoom down into Africa, right? Africa has a population of about 1.4 billion people. And in terms of developers, so technology talents, we have just about 800,000 people. So this is including the whole of Africa, professionals, okay? And then if we take that into Nigeria as well, I looked at different reports, and on an average, about 100,000, and I'm sure that number is depleting by the day. Now I'm going to take another country, and this is India. India in itself has about 1.6 billion people. And as of now, they have about 5 million developers working in India. So can you just do that comparison yourself? You know, we have in the whole of Africa about 800,000, but in India, they have about 5 million. And as of 2017, so that was 5 years ago, they had about 2.5 million. So in the past 5 years, they've managed to double their technology talent. And I think that this is very important because, you know, we all know where the world is going. So I'm going to open up to my panelists and just to hear everyone's view. What is your experience on this topic? Do you actually even have a talent problem? What do you think the cause is? So maybe we can start with Oyin. Go ahead.
Armenia, neighbor country. And it happens with different areas, especially and finance. And neighbor countries. Also, otherwise, startup teams, especially, for example, Fintech or projects which work with markets. And the reason why many and it's better. So I will repeat. So finance. For example, 50,000 people moved out from Russia to neighbor Armenia, and people went to other countries as Kazakhstan or Georgia, Serbia or Kazakhstan, Uzbekistan. So it's quite a lot. But from another hand, a lot of, for example, startup teams, they started to find new markets. And the reason why many of them asked me to introduce them to these Nigerian banks and corporations. And also, Russian companies started to search Asian and African markets to find and implement new digital products and software instead of European and American. So we have, so our talents problem became very strange because people started to go to other countries about where they didn't thought to live before. And instead...
So sorry, Asani. We're really, really struggling. What I'm thinking is I'll come back to you because I'm sure you're sharing really valuable insights. So I'll come back to you again. If you just try and work on the speaking, it'll be great. All right, thank you. So I'll just move quickly on to the next question. And I think, a lot of times when we're talking about tech talent, and even in Nigeria now, there's a focus on tech. But I think it'll be good to hear, and I think from probably Owen, just because of what you do in your industry, on what you think, what other industries do you think are affected by this?
I think the short answer is I don't think there's any industry that is not affected. So yes, I work with the room, and we focus on training and placing tech talent. But I am a lawyer, so I can say even I'm trying to hire now, and it's a bit of a struggle to find people who have the requisite skill set for what's required to perform on a global stage. I think increasingly as we stop competing with the man next to us, technology is a leveler, right? It gives, to a large extent, equal opportunity, right? And so what that means is that we're no longer competing with the person next door to us. We are now competing with people in other African countries and people across the world. So it's creating an issue where it's no longer okay for the talent to just be average, because you can access talent of the highest quality across the world and across the continent. But it's also for the employers. If you're not providing the kind of benefits, the kind of pay that talent can get from somewhere else, they're going to go to the highest bidder. So I think it's particularly endemic in tech talent because of the level of technical expertise required. But I think it's actually a general thing cutting across industries, governments, banks, and particularly, of course, as we've said, fintechs and other technology companies.
Thank you so much. And I think that gives a good insight because it's basically everywhere, even doctors, nurses. I mean, it's huge at the moment. And we're going to talk about talent and average, or I would say mediocre, very shortly. But before we go there, I want us to talk about the fact that, yes, a lot of people are leaving, but is that necessarily a bad thing for the country? Because, we need to ask ourselves those questions. Some people encourage that people leave the country and come back better trained to equip, the country. There's a diaspora impact as well. So I would like, to hear from, I guess, Lekon or Uchechi, and also yourselves on what your views are on that, please.
Hello. I think, first of all, we just have to change our mindset, how we approach everything. And I'll use technology as an example in terms of employment within technology. Anybody that has worked with any engineers know every engineer is doing like 7 jobs at the same time. They moonlight, they work for multiple companies, competitors, and I think employers have to be very honest with themselves and say that having a full and exclusive engineer, other people within that space, is just very unrealistic. That's the first thing. Until you actually face that paradigm and say, do you know what, you're going to be a contractor, my IP is exclusive to me, but you could go and do whatever you want to do, but you meet my own KPIs and OKRs, do whatever you want, I don't care. That's the first hurdle. The second issue, COVID was like an awakening of disruption for every sector, be it technology, banking, transportation. But in Nigeria, we want to go back to the old way, everybody back in the offices, everybody clocking in, paper, pen. It's like we haven't accepted the reality of what COVID has done, accepted technology as an enabler, a driver of efficiency. So I think that psychological block, until it's removed, will continue to be a hurdle for every industry in Nigeria. But finally, I think, like you said, moving and migrating from Nigeria should not be seen as a bad thing, as long as we accept remote working for what it is. People are going to work within their own comfort zone. Again, as long as they meet the objectives of their employer, objectives of their contract, it's not an issue. So we have to be a lot more dynamic, a lot more flexible, and a lot more fluid. And if we don't do that, we're still going to be very inefficient, and people will simply leave Nigeria, find jobs that meet their own requirements. Again, I'm a very old man, I'm not a Gen Z, but you have Gen Zs who put their mental health, their priorities, their well-being, and their happiness above everything else. You're going to be seeing a lot more of that, and you're going to, unfortunately, see dinosaurs like me being the talent that is left for people to actually use. I don't mind doing multiple jobs, but the reality is, unless we're able to shift our mindset and how we see employment, and we see employment as an opportunity to expand rather than being a slave to the sector, to the industry, things will not change.
Thank you. Thank you very much. It's for the people. Please, your views as well.
Okay. I think I'm aligned with most of the things killing their employees. You must look long term and say, these are my projects, these are the XYZ I want to achieve, and you must be willing to invest. Because developers now, every 6 months, want to learn new technologies. Some of them, it goes beyond the financial aspect. They just want to do something different and do so many things at the same time. So you must be willing to engage them, train them, and also give them the exposure that is required. And one thing that I'll also talk about, I think, is we have also tried to increase the number of women in technology. So 4 years ago, we had 10% of our team that were women. Out of 200 people, qualifying 20. But today, we have 30% of our team that are women. So I have about 450 software support engineers that are women, and they've also been able to provide stability in the operations. We have leaders within the organization that are women that are able to help stabilize the business and all that. So I think really we need to invest. And about people leaving Nigeria, it will always continue to happen. But the question is, we have 30% of our people that are unemployed. These are millions, so we need to invest in upskilling them. The Indian you made reference to, I think they do more immigration than us. You find them in every country, everywhere in the world. but you see companies that are running 100,000 software developers in India, because right from secondary school, they've started upskilling them to get involved in software development. That is the gap we need to fix in Nigeria.
Thank you. I'll speak to that, or let me just say it now. So for me, technology is something I'm very passionate about because my first job was as a software engineer. So I used to be a coder those days, and I wonder whether I should have, risen up or just stayed as a developer because, it seems to be what's hot on the market. But those days we were like, I was so rare. I mean, in a room of maybe 13 other developers, I was the only woman. So it's really good to hear what you guys are doing, and I know a lot of other organizations are doing that as well. So I'll speak to that. I'll come over to Asani. Please, if you could tell us your views just on this diaspora impact. Do you think, is it really a bad thing that people are leaving?
It's yeah. I hope now you can hear me. It's a good and bad. But it's as an example how it was happened in 90s in Russia. After crash of Soviet Union, many people left Russia, but later they understood that they can get more opportunities at home because capitalism just came there, and they returned and started new businesses, IT companies, kind of. Some of them because kind of starts very scam business, but it's bad stories. We have good examples. So I guess many people who went for study and jobs to, for example, to Europe, to the USA, they will return and become kind of accelerator of economic growth because they can get experience, they can see, and then after that they can realize that they gain more, I don't know, opportunities, possibilities, money, and their homeland. So, yeah, I hope it's a normal process and people will return how it was happened in 90s and beginning of 2000s in Russia, because in this time, kind of growth of GPT and economics was so fast, and when time of capitalism bring new technologies, people could realize and get more gains, scores in Russia than it's abroad. So I hope it will happen, for example, in Nigeria, I guess, and other African countries.
Okay. Thank you, Asani. I must say we did struggle, but I think I picked up something around that there is a good part as well. And I can just even expand a little more on that, that countries like Vietnam, for instance, they've done a lot of work recently in bringing the people from diaspora to build the country. And that has been really huge for them in terms of what is done for the economy. But I'll move on to the next question now. And that also speaks to what Oyin was speaking about before. So there's a bit of a fear from people who are left that we may be left with mediocre talents. So given that, I mean, a lot of people are leaving the country, working remotely, there's a possibility that we may be left with mediocre talent. There's a statistics from McKinsey that says that good talent is 8 times more productive than average talent, right? And then there's also the thought that, okay, whose responsibility is it really to improve this talent pool? Some employers say that, well, what's the point? After all, I may train, I don't know, somebody today. And, in fact, as you are training them, they already are processing Canada. And potentially, by the time they are done, they are leaving. And there's not much you can do. So I would like to hear views. And I think, Oyin, you touched on that already. If you can just continue and I'll ask a few people.
On the quality of talent?
On the quality of talent. And how do we really improve it?
So the interesting thing about Jakba, it's happening, absolutely. But how many people in Nigeria? 200 million?
200 million?
That we know, that we've counted, there are a lot of people.
Yeah.
Right? That's the idea. There are a lot of people in Nigeria, and there is a certain level of available funds you need to have to this Canada we're talking about to be able to jackpot there. So yes, there's a lot of people going, but there's a lot more people that are here. I think water will find its level. People want to be successful, and they're going to explore the best possible options for them. But there's still a lot of people that are left in the country, and we should focus more on developing the infrastructure, developing the educational system. I mean, I'm a technology lawyer. I'm not really sure if that existed in any tangible way, 20 years ago, maybe even 10. I speak to a lot of people, a lot of young people, and we talk about Web 3.0, Industry 4.0. I'm sure those things never came up in the entire degree that they did, except if they were in maybe computer science degrees. But the point is, there's a lot that can be done with the people that are left to increase the level of talent. So yes, from a governmental perspective, there's a lot to be done there, as individuals as well. So I was saying earlier at the room, we train talent. Next year, we're going to be training cloud computing, talent, data scientists. We've recently this year, we trained over 75,000 people with virtual assistants. So many, there are courses out there that you can take, right? And upskill yourself. And on the kind of the jackpot front, the other side of what we do is placing talent, African talent, not just Nigerian, African talent with global companies. So we have people in Rwanda, for example, we have 8 software developers who's just started working in Rwanda for a company in the US. That's going back to the point he made about being open to remote work. So if you're open to remote work and you focus on KPIs, or have people actually upskilled, right? And they stay within the country, within the continent, and they still perform services and create value for foreign companies, but then the value doesn't leave the country. You know what I mean? So I don't know, I think we need to reframe the conversation and not have this gloomy view of this talent thing. It's really not that deep and it's not that bad. We just have to be open-minded and realize that business as usual is not going to work. You cannot be looking at your staff and eyeing them, what have you done today? That doesn't work anymore. And if you're open to that, then the possibilities are endless.
Thank you. Thank you, we hear you. And I'm sure a lot of people here will be interested in your company after this conversation as well. But I think it'll be interesting to hear from Uchechi as well on this bit about should you really invest in the talents because of what's happening?
So to answer your first question, I would say that it is everyone's responsibility, both the government, the employer, and even the employee themselves, the talents themselves. I think as a nation generally, we're quite reactive in nature, right? So all of a sudden there's a brain drain and now we want to fix it. If Nigeria was, I'm sorry to say, why would anyone want to leave? If the employee packages, compensations, benefits were great, why would anyone want to leave to be a second-class citizen elsewhere, So I think that improving employee benefits and packages, making it mouth-watering, making it attractive to a competitor like Google or Amazon, just like Onyi said, where your competition is no longer the next door neighbor or the next startup that's happening. You're on a world stage now. That's the pros and cons of technology. You're now on a world stage. You're competing against a package from Amazon or a Google or a Meta, So it is everyone's responsibility. If we had better, I mean, transportation or roads and all of that, who would want to leave? At the same time, you're thinking, I'm going to train these people and they're going to leave. But if your package is better, it's more watery, it's more, accommodating. Everyone wants to take care of themselves. Everyone has family. Everyone has bills to pay. And unfortunately, it gets to the highest bidder for some people you meet and they're really passionate about their craft in Nigeria and they want to stay great. But again, if you meet people like that, reward them, make them hungry to stay, make them desirous of staying. Don't, find the talent and then you want to drain every single thing and then they are having to compete with other great companies. It really doesn't balance up. And to another point, I think that, again, it's also a long run, input. You're not going to see the outcome now, because as we also have the role of, putting back to the community as employers. You're not necessarily training the next talent to retain them. How about you train for better, a better country, or a more competitive pool of talent to have? And again, if Nigerians are going, you as well, you can also employ people from India as well. I mean, we're talking about remote work. You can employ talent from Angola, from Kenya. You don't necessarily have to employ everyone from Nigeria. You can also move around. And again, with the different sort of mindsets, the different backgrounds, you're also bringing in flavor into your company as well. So it shouldn't be a bad thing, but at the same time, it's a call for everyone to wake up and do better, because the competition now is on the world stage.
No, thank you so much. And I think something important that two of you have said is really about the mindset, how there needs to be, and I think Lekon touched on it as well, a mindset shift for employers today. It's not going to be business as usual, right? Just as you said, you may be training, a person may leave your company, but really think about the country. At least it's a better place. You don't know if they will come back tomorrow or what impact they would have. So I think that's really, really important, that a mindset shift is required. You can't be, tracking people the way you were tracking them. I mean, it should really be about your work being done, and delivering. I think that should be, a key focus. So I'm going to move to the next question. And I think this is really the meat of the matter. How do we really bridge this talent problem? How do we bridge this gap? And I'll ask, Bolahon to speak to that first, and then Lekon and Asani as well, please.
Wow, okay.
How do we do it?
Okay, like when you mentioned earlier on, we are a country of over 200 million people. The talent is there. As an employer, you must be willing to invest in continuous education for your employee. And as a nation too, both private and government, we must be willing to invest in our people, to train them and know that tech talent is the new oil. And we did a pilot with Microsoft early this year where we took 125 people from non-tech background. We ran them through a 3-month intensive program on software development. And by the last week of their program, 85% of them got jobs. Now, we are looking to do a similar thing to train over 1 million people over the next 5 years in software engineering. That is the future. And what organizations also need to understand, and what he mentioned is, you can no longer own this person as an employee to do 8 to 5, clock in, clock out, invest in the person, and expect 5-year long service award, 10-year long service award. Gone are those days. What we should begin to look at is, right now, we are beginning to do tech talent as a service, which is outsourcing. So you have organizations who have projects, or you want to keep software developers, you can focus on your 30% top talent in-house while we outsource the 70% for you, because I can invest in them, and I know in 9 months, he's tired of working with you, he wants to do something different, we can reassign them to a different project, either within the company or outside the country. So organizations in Nigeria have to start looking at IT outsourcing, not owning the employee. You begin to look at talent as a service. So the good thing is we begin to see lots of Nigerian companies reach out, and we started offering talent as a service locally, because this takes iteration away from you. What is key for you as an organization is business continuity. So at every time T, you have the exact number of talents you need to work on your project, and you don't have to make much investment on scaling, which we will do for you. So I think that is the new normal of work, because the average tech guys want to work on 5 projects together. He wants to work 16 hours. He's not willing to clock 8 to 5 with you. He wants to work from home. He wants to support someone in Nigeria and work with another guy in the UK. So that is the future of work, and I think that will fix the talent gap.
Thank you. Just before I move on to Aseni online, What I was going to say is those days, and I would say during my father's days, my father is over 70 years, and those days when you finish school, you almost, once you get a job, that is your job. You're most likely going to retire there. You know, my father worked for Shell and he retired there. Now, honestly, just as you said, you can barely get, someone to stay with. If you get someone to stay with for 2 years, I mean, you've done well as an employer. So it just speaks to how things are changing. But sorry, Asani, please, I hope we can hear you better.
Okay. Oof, yeah, the talents, as I say, as a gems now, and everyone looks so great, especially for fintech guys and girls all around the world. In this case, I guess the local talent program is a great idea because the founders and its teams would be proud that their search can become a reality in a country they will live in. And no need to move, and no need to check for the products a new market. They can build the products that are exactly missing on the local market. And also, I would like to say about university. It's important to grow new talents through project education. It means when university start to support young startup guys, maybe they can do education program, business incubators, acceleration program inside, and when it's possible to how it's better to say, when they create teams inside of university, inside of course, and they create own project with kind of a diploma, course project as a startup. So when they create some projects with example managers and software engineers, and finally they defend as a master or bachelor project in the end of university. So as long as they make passionate about their products and its growth on a local or another region market, what also I would like to say, and sustainable pipeline, in my opinion, is support local tech and non-tech specialists, support and let local startups grow in the local market. And I guess it's necessary to let universities and corporations to do own inner entrepreneurship programs, because through entrepreneurship it's better to grow talents as well. I mean, it's possible to grow skills of people and discover the new skills and possibilities to do new things.
Okay, thank you. Thank you, Asani. To be fair, we struggled, but I was able to pick out something around universities, and I think that's really important, how there's a lot of, I think you also mentioned that people graduating, like, did you say 600?
About 600,000.
600,000 people graduating every year. So there is a strong and solid pipeline I think we can go into. Lekon, please, your views on this as well.
I think the entire educational structure needs to be overhauled. That's the first thing. Nigeria produces people that can pass exams, but people that don't understand analytics, problem solving, value propositions. And please, nobody shoot me, but I've never seen so many CVs of people that have studied mass communications in my life.
You've never seen?
I've never seen so many CVs of mass communication. I think it must be the most popular topic in Nigeria. Mass. So I think firstly, we need to think about what we actually want. So we need to produce or provide a pyramid educational structure that enables talent to rise from the bottom, from when people are in primary school all the way up to university. So when they enter the labor market, they're actually prepared and they have the correct skill sets to actually provide value to companies. Those skill sets might be specialists or they might be very transferable. But fundamentally, we're still producing or educating people in a manner that was probably ditched by most Western countries 30 years ago. The next step is actually to have properly accredited certifications and training processes. So the idea is whether you are a specialist in Microsoft coding or enterprise solutions, your skills are very transferable, and also it's recognized by any organization. So again, it goes back to the flexibility. But fundamentally, until we have an educational structure that enables us to rise up, I think we're still going to be very stuck. We're always swimming against the tide. Talent will always rise up. But fundamentally, the reason a lot of countries are able to develop and adapt is they have a holistic policy, idea, a short, medium, and long-term plan to enable people to transition from education to being part of the labor pool. And again, some companies succeed, some companies fail. But you never find situations where people who are part of quote-unquote companies that have failed aren't able to then transfer their skills to other sectors. So we have very niche or very unnecessary skill sets that are produced that don't actually lead and grow towards Nigeria's future. Again, because we're talking about technology, so I think I'll focus on that. Like we said, the talent pool of engineers is very, very small. But that's only an element of the entire technology ecosystem. We talk about partnerships, we talk about understanding and articulation, the commercial elements of technology, disruption, how a fintech is going to affect the entire banking sector. You know, again, fintechs ourselves, we need to decide, do we want to be fintechs or do we want to be glorified banks in a different name? So it's about identifying exactly what we want as a sector and how does that affect other sectors. Are we going to bring in people that come from the banking sector naturally, or are we going to say to ourselves, we're going to come together and develop a framework and architecture to actually produce, educate, and train talent that seamlessly fits into what we want? I don't think the fact that people are migrating away from Nigeria is actually an issue. Like I said, we're always swimming against the tide in Nigeria. Universities are on strike, but still you have incredibly talented people that rise to the top. So clearly the pool is there, and people will always remain in Nigeria. Some people will never leave Nigeria because Nigeria is home. So to me, that is not a problem. The issue is how people are educated and the skill sets that it's embedded in them from a very young age all the way up to university. That fundamentally has to change.
No, thank you very much. And I think something key you've mentioned is that we need to start really early. You know, right now we're trying to solve from university, but others are already solving from primary school. You know, I know Kenya recently introduced coding as part of their, curriculum for schools. You know, what are we doing as well in Nigeria? You know, and how can we? There are a lot of skills, problem solving. You know, these are critical for any, exactly any job. So I totally agree with you. So I want us to wrap up very shortly, but I would like to hear from Owen just your views on what roles, and just like 1 minute, do you think, the government have to play, the private sector, what role do you think they should play in this? Because we've all agreed it's everybody's, it's everybody's problem.
Yeah, I don't think there's anyone who doesn't have a role to play in improving the final good place we want Nigeria to get to, and our talent specifically. So we can start with government. So he alluded to it earlier. The educational system just isn't churning out the type of talent that is required, either in by tech companies or not. So yes, there's tech talent, but there's project managers, there's agile masters, there are salespeople who are still needed within the tech ecosystem. But a lot of people who've been churned out of universities are not appropriately educated to take up those roles. And we're uniquely placed because Nigeria's average age is 18, if I'm not mistaken. So we can take over the workforce in Nigeria and in Africa within the next 10 years. So the first thing is putting those educational structures in place, revamping the educational system to make sure that the talent being churned out can actually do the work required. From a private sector view, I think you referred to it earlier, Chichi, which is that you are the one that is going to employ these people. So it's in your best interest to make sure that they can do the job that you need them to do. So reaching out above and beyond your immediate, sales increase and making sure that you're putting some money back into schools and so on to make sure that the talent is appropriately can perform the services required, but also within your own company, investing in your talent as well. And then individuals, families, I always say it, you're responsible for your own destiny. There are opportunities out there for you to be as qualified as anybody else. And this thing is not theory. I work remotely, right? I didn't sleep till 4 a.m. I've done 9 to 5. I've done traveling from mainland to island, and now I work from home, and I'm a lot more productive. My employer is over enjoyment is what's worrying them, because they take so much of my time because I'm able to give it. So this thing is not theory. The opportunities are really there, but as an individual, you need to upskill yourself as well. Yeah, I think basically everybody has a part to play. Just think about, what do I want this country to look like? What do I want my own life to look like? And then do what's required to get there.
No, thank you so much. I'll come back to just summing up your points. But I think apparently we need to take a quick break, but we're going to remain here. There's a keynote address for about 10 minutes that needs to happen. And so we'll take that on, and then we'll come back for our Q&As. So I'll introduce Mr. Mark Elliott. He's going to speak about navigating the next normal. He's the division president of MasterCard Sub-Saharan Africa. So welcome, Mark. If you could go ahead, please. He's online.
Hi, good afternoon.
Afternoon.
I'm hoping that they will take me off and see my face. I can see into the room there, and maybe they can start sharing my video. Right, maybe in the meantime, I should just get going. Is that the best thing to do? And hopefully...
Yes, you can go ahead while you're trying to set up a video.
Thank you very much. Okay. Well, hi, everyone. My name is Mark, and I'm the division president for MasterCard Sub-Saharan Africa. And it's just such a pleasure to join you in Nigeria Fintech Week. We find that events like these are just really important to drive innovation, foster collaboration, and form strategic partnerships, and accelerate positive transformation of our collective ecosystem. It's something that MasterCard's super passionate about, and we're proud of our legacy as we try to be a supporter of both end-user fintechs and fintech enablers. Together with our fintech partners, we're all looking for the best way to navigate the next normal, to form a new value chain and enable new technologies to enhance financial service provision across Africa. And, you know, if you're in the technology sector like we are, there are a few adventures that are more exciting than this one. So, you know, to be successful in this adventure, we need to be mindful of the wider landscape and the context. The global economy is contracting, and IMF forecasts global growth to slow to 2.7% in 2023. With rising inflation, increasing food prices, and global supply chain issues, we can expect an impact on consumer spending. That said, fintech is actually doing quite well. Data shows that the number of global fintech unicorns was 6.5% more than it was in 2021 compared to 2020. Globally, $287 billion was collectively raised across 534 exits just last year. And, you know, among these trends, we're expecting